Welcome to the Contractor Success Forum. Today we are talking about year-end planning. I can't believe it's already getting close to the end of the year. Now, you may be listening to this later on, but for us, this is October. Year-end planning is coming up here, and we are, by the way, the Contractor Success Forum, discussing financial strategies for running a more profitable, successful construction business. And if you want to know more about us, go to our show notes. And if you want to tell everybody else how great this show is, help us out, go to the, rate it. That's right. So you rate it. You got to scroll all the way down below all the episodes if you're on iTunes, and rate us, give us 5 stars. That will let us go closer to the top of the list so more people can hear this show. But maybe you don't want your competitors to have this precious information, so you may not want to rate us, but they do want to rate us to help us out. Thanks. And we have our 3 long-term construction industry professionals. We have Wade Carpenter with Carpenter and Company CPAs, helping contractors nationwide to become permanently profitable. And he has over 30 years of experience. And Stephen Brown, our construction bond agents with McDaniel Whitley Bonding and Insurance Agency. And he also has over 30 years of experience underwriting and placing bonds for you as contractors. And I am Rob Williams, your profit strategist with Iron Gate Entrepreneurial Systems, providing insightful clarity to your business, having decades of experience in vertical integration as a contractor, a manufacturer, aviator, and a financial strategist.
Insightful clarity.
Insightful clarity. That's what we are providing all the time.
That's good stuff.
It's amazing to get that.
That's insightful.
Thank you. Yes, it is. And it's clear. It's clear.
It is.
All right.
Hey, remember our motto, guys. You don't know what you don't know. You don't know what you don't know until you know it. You don't know what you don't know. And I tell you what, a lot of my customers don't know about is getting ready for the end of the year. They maybe pretend like, well, maybe I don't need to do this. I've got other things. It's football season. I don't need to be messing with this kind of stuff. Wade, what do you say?
Well, I guess I can talk about the expectations of the CPA. Most of the time, if a CPA does any planning at all for a contractor, it's around the tax side. But I believe there's 4 prongs of the tax planning. For our general contractors that really need this, you want to minimize your taxes while maximizing your financial statements, all while not wrecking your cash flow. So it kind of like needs to take 3 prongs to it. But for my CFO clients, the ones that we, work deeply with, we also put the 4th prong on there, which a lot of people should really be thinking about. And that's the strategic planning, looking forward and looking at what you've been doing, and maybe you should be doing some things differently.
I love that 3 prong. Can you say those 3 prongs again?
Minimize. I've said this for years that most contractors or most CPAs don't do this for contractors. You want to minimize your taxes while maximizing your financial statements while not wrecking your cash flow in the process. And I can explain a little bit about.
Wow, that's a great summary. I like that. And then the 4th one is strategic.
Well, the strategic planning side of it.
Boy, that's great advice. Great advice. I like it. Anyway, go ahead. Sorry, that was great. I really liked hearing that.
So we want to start maybe on the tax side, just talk about something.
You are the tax.
We could do a whole podcast on the tax side, but a lot of our listeners are in different situations. Some of them have long-term contracts, but one of the things I would tell you, the first thing you should know is your accounting method for tax purposes. Mm-hmm. If you know what it is, you can know how to, I don't want to say manipulate it, but work with that strategy to minimize your taxes. A lot of times you may be on a cash basis, and there are certain things you would do to minimize your taxes. Basically, it's deferral games, and we're trying to play legal deferral games on taxes, and that's what most of the tax planning is. If we're talking about let's get way into the gray and let's do something illegal, well, I really wouldn't recommend that. But The other thing, the next point that I just did a webinar yesterday for about 25 people. Sometimes there's new tax laws that you should be aware of and how they can affect you. For the last 5 years, when the 2016, the Tax Cuts and Jobs Act, and then some of the other ones, there's been some major things every year, PPP loans and how those are going to affect us. And then here in Georgia, I know this doesn't affect Tennessee because you guys don't have state income tax, but the webinar yesterday is this SALT Parity Act of 2021. Georgia implemented that, and very few CPAs in Georgia know about it. And I'm telling people you need to really understand how that affects you and plan for it now, because it could affect how much you pay and how much you save in this case on the federal side, as well as potentially avoiding some tax penalties.
Can you tell us sort of what the Salt Parity Act is?
Well, I did an hour on this yesterday, so
Right.
minutes, but basically the Tax Cuts and Jobs Act limited how much you could deduct on state and local taxes if you itemize, and they significantly increased the standard deduction, so a lot of people can't itemize. Well, a lot of people are trying to get around it, and what this law does is, in Georgia, which there are several states passing this, but for partnerships and S corporations, we can deduct the state tax at the entity level, then deduct the taxes on the federal K1, and it ends up saving money, especially like partnerships. You can save on self-employment tax. It can be significant if you plan for it right. Like I said, I don't have time to go deep into that, but legal ways of deferring taxes, if you know the game and done properly, that can also, most people think, well, if I do something, spend a bunch of money out, I rail all the time about, like, we go buy a truck on December 29th to knock down our taxes. Well, there are things you can do if your tax method is on a cash basis, but your financial statement, you got long-term contracts, you're doing a percentage of completion, which leads into the financial statement side. I mean, I know, Stephen, I know you were talking about some of the stuff on the financial statement side.
Right. A construction oriented CPA understands the needs of the bonding company while minimizing your taxes. You can't have two sets of books for that. It doesn't work. And I always have said and maintain that I've seen a lot of good contractors go bankrupt trying to get out of paying taxes. So you just got to plan ahead. And another tip I'd say, Wade, is if you don't understand what your accountant is telling you, take the time to try to figure it out. You don't have to be an expert, but ask questions. I know that account may be on the meter and the meter's running, but you got to learn these implications. And your accountant, if he's a good one, will or she's a good one, will appreciate you asking those questions.
Right.
Yeah, Wade, I thought it was so interesting. I know Steve and I were in a CFMA class and looking at the gap reporting for your financial statements and then the taxation. And I don't think I ever realized that they're really two separate things. I mean, they're connected, obviously. But
well, I know Stephen said they're not two separate sets of books, and technically they're not converted, but in a way, yes, there are two legally separate sets of books.
Yeah.
And
well, as far as what you show the bond underwriter, I'm sorry.
And maybe they're not different sets of books, but they're two ways of reporting.
Correct.
Reporting for taxes, and
that's more accurate.
Set of books for GAAP and for what Stephen sees and these underwriters.
Yeah, but
that was fascinating to me.
But some of the things that you do, like holding off or billing or collecting money or those kind of things, which I'll get into, but knowing how to working with somebody like Stephen, the construction oriented insurance agent, can tell you, what are we looking for? Do we want to see so much in cash? Do we want to see our working capital ratio or equity of a certain amount? And we can plan for that. And as far as trying to do that, knowing how, if you do something on the tax side, how is that going to affect your, say, just your working capital ratio? Knowing what a bonding company would throw out of your working capital, like prepaids, and I mean, most contractors don't have inventory or loans to shareholders, those kind of things. But if you pay down your payables, as long as you got positive working capital, that helps your working capital ratio. But if you got a negative working capital, you're working against yourself. And knowing those rules can definitely, help dress up the financial statement if you know how to do it. And again, talk to your bond agent. From my perspective, and Stephen, correct me if I'm wrong, but most bond agents are going to basically hang their hat on those year-end financials.
Absolutely. That's the number one thing that greases the wheels toward getting your bonds. They look at that year end statement and everything is based on that. Everything. Now, as the year goes on, your ability to provide interim financial statements, good balance sheet, income statement, working process schedule, that helps you. But it's your year end, Wade. You're right. And that's why we're out there pounding the pavement, begging our contractors, please meet with your CPA now. If your year end is 12/31, please meet with them now. Middle of October, November, that's the time to start strategizing. That's what we need to get through to everybody. There's only so much Wade can do after your year end when he's reporting.
For these things like if I want to go get that F-150, I got to get it on 12/31 and spend all my cash out to that, because I mean it's still an asset. It goes
It
from
sounds
cash
exciting,
into
doesn't
my
it?
asset of a truck. Isn't that a great idea? And then I get to reduce my taxes.
Yeah.
Or buy a plane.
Yeah, buy a plane. Yeah, is
Sometimes
that a good
right.
idea?
No, I mean, that's
No,
absolutely one of the points on the tax side is after December 31, assuming you're a straight December 31 year in, on January 1, it's too late to do something about 99% of what you can do to minimize your taxes. So just keep that in mind. If you're trying to dress up your financial statements, it takes a couple of months because we're going to have to kind of project where you are with your contracts, which kind of leads into the third prong of this.
Wait, before we go to that, by the way, I don't, in case you guys weren't clear, when the car dealerships have the best day of the year to buy a truck is December 31st. That's not, we were not being really serious about that. We were actually being sarcastic. Don't go do that. Isn't that kind of right? Just, I wanted to make sure our listeners.
Well, people do that all the time. People hate paying taxes to begin with. Contractors absolutely hate paying the government anything. That's always their, what can we do to get out of paying anything? But
Yeah.
the idea is, let's not have surprises. Let's plan. We say on this thing all the time, if you never have profit, then, you're never building a healthy
Right.
company.
But if bonding is important to your business, or maybe it's not important to your business, but if bonding and getting a bigger bond is important, or having a good financial statement to sell your company, or different things like that, that's usually not a good idea. I wanted to make sure they weren't thinking we were recommending go buy a truck at the end of the year.
Well, it's a part of a strategy, and sometimes we'll tell people that's if they need it, maybe they
Now's a
should.
good time.
But that also on the financial end, that brings up another huge point. If somebody like Stephen, the bonding agent, is going to look at your financial statements very differently from a banker. So if you're trying to dress up I mean, I wouldn't say very differently, but the bond agents are savvy to this stuff. What does it do to your working capital, your equity? You may need to dress up your debt to equity ratio. A lot of stuff on the balance sheet that most people don't know how to do. Yes, they want to see profit, they want to see cash flow, but they want to see a healthy balance sheet. But the things that a bond agent would throw out is not the same thing as a banker, and a lot of times the bankers are not really as sophisticated as somebody like Stephen.
Thank you very much, Wade. All right, where I didn't mean to
Oh, that's
stop
okay.
you.
That also leads into the third prong of this is if we do have one plan to minimize our taxes and then we're also maximizing our financial statement, well, if we don't pay attention to saying, if you hold off on your billing, you may be into February, March before you get some cash flow in on that job. Don't wreck your cash flow, or at least think about it and think about what it's going to do. As part of the plan, you also need to know if you're going to have a huge distribution of cash to cover your taxes in March or April when that comes in. So cash flow side is not just part of the plan. It's got to be part of the plan, but it also is a strategic part of it. I always say a contractor should have two different types of plans, and this is, especially year end, this is the time to be thinking about it. The first type of cash flow plan should be the short term. usually a 13-week, 1 quarter ahead or 6 months ahead, the shorter term, because that is going to be how you can see what's coming. The longer we get out on trying to plan for cash flow, the less accurate it's definitely going to be. But if you got long-term contracts that's going to last, you can guess at what's going to be billed over certain months, but you know, you need a short-term plan to say what do we need to cover in the next 3 months, and you also need to look at it on a long-term basis. This is the time of year to do at least a year in advance, but typically we'll do like 5 years. And it's not just from that standpoint, it's also saying, well, if we're going to get out of debt or if we're going to do one thing or another, we need a longer term plan. And the longer term plan of cash flow gives us targets to shoot for. That is our benchmark. Things always happen to where prices of supplies, labor goes down, those kind of things that can affect it. But that long term cash flow plan can give you a major point of like, this is what we're aiming for. And that's something you should be thinking about if you're not getting results you want.
Right. This whole year in tax planning is about hitting your target. How you measure that is what your accountant helps you do. And again, if you're not meeting with your accountant before the year end and your bonding company's getting the year end financial statement in April, May, June, it's almost guaranteed if the statement comes rolling around August or September from the previous year, it's going to show a loss. That's what all bond underwriters think.
Yeah. On that cash flow planning, Wade, I have people call me new clients a lot, and I can't believe, actually, I can believe it, but I'm still surprised at how many people don't realize they're growing and they don't know why they don't have money. And then there's like, oh, but we're going to be okay because we got $2 million more of business. And I see they're like getting paid in 90 days and they're paying in 10 days. And I'm saying, that's going to cost you hundreds of thousands of dollars of cash flow. And they haven't planned for any of this. They don't have a clue. And I'm just thinking, okay, these guys, they're going to be out of business in a year. This is going to take them under if they don't have some kind of financing plan or something for that. So
We've had some great talks about it so far, and we will in the future. But every bit of cash flow has to do with pre planning, making sure you're on track. When
Yes,
you say, Wade?
absolutely. But a lot of people and a lot of the software out there that helps you build a cash flow plan is strictly long term.
Long term.
But the short term is what we are operating off of. 3 months, 6 months is the most you can go out and be accurate, but it can see a couple of weeks ahead that you're going to be short 3 weeks down the road if you don't do something.
yeah,
And it can be motivating to get
I tell you,
something
it's a
done.
big de-stressor as well, just personally, just to see that. I remember 08, 09, 07, I had a daily cash flow report. We were struggling to have our receivables come in. People couldn't pay us. And that was in the lumber yard and the truss manufacturing and some of the contracting things. And I mean, every day we had them all listed up. This is what we're going to pay. This is what's supposed to be coming in. And it was a daily decision. And just having that piece of paper was a major stress reliever just to have some idea for a short-term plan.
Right.
Well, if you're going to hit a deer at 500 yards or more, you got to be able to hit that deer at 100 yards, 50 yards. You got to start. You got to aim in a direction, and you got to make sure you're practicing. And that's the best tip I could give because your accountant will help you. And the more you learn about it, literally, the more interesting it will be to you. And that breeds success, wouldn't you say?
Absolutely. And the other part of this is, let's talk about the entity and your strategic plan.
Okay.
Number 4. This is number
Yeah,
4 today.
absolutely.
Yeah.
I mean, that fourth prong is, there's a lot to that. And one of the things going back to the tax side is I like to kind of review the entity structure with a contractor. A lot of times a contractor may be getting into a different line of business. It may have different liability. It may have some different tax consequences, or say you got into developing versus building for somebody else. There are different methods. Maybe a contractor wanted to start renting their own equipment or they bought their own building. Well, sometimes there's ways to put it aside for liability purposes, but there also may be times where you may need to set up a different entity structure because, say, you're flipping properties or something like that. So let's talk about the entity structure. A lot of contractors go out and do an LLC to drop of a hat because their friend did a LLC and they Googled something on the internet and said that was a good thing. But like this SALT Parity Act, if you're an LLC structured as a sole proprietor, you're going to lose out on that potential benefit from having that. So that may be another factor to throw in the mix for why maybe you should look at a different entity structure. Another part of the strategic plan is reviewing your profit plan. If you didn't get the results you were looking for last year, you need to ask yourself why. What are you going to do different going into next year? If you do the same thing, you're going to get what you've always gotten. I know that's an old saying, but you know, a lot of times we've done things a certain way, but you know, we have these sit downs with people, and I vividly remember this general contractor. He would take anything and everything he'd get his hands on. He would bid everything. He loved to get the higher job, but we sat down and kind of segmented his jobs and said, "Well, you have these $300,000 or $400,000 jobs with this." It was basically a retail chain, and they would send him all over the country, but he would put these people off to go do this $10 million job. And we found out after segmenting it, he made a whole lot more money. He'd get in, they were cookie cutter. He could do them probably cheaper than the next guy because he knew exactly what the specs were. They get in, get out, and made great profit. So a lot of times looking at how your profit is with somebody with an outside perspective can make a huge difference. And I guess finally, just kind of wrap this up, the strategic plan, which when we do that with a contractor, or that's a very involved process, but even if you're doing it yourself or have somebody help you with it, you may be looking at your management structure, you may be looking at the personnel you got, you may be looking at your suppliers and the people, again, the people you work with. Maybe you shouldn't be working with certain owners or whatever if they don't pay you properly. And that's just kind of the tip of the iceberg. But we could get very deep on that kind of subject. But when we do that deep strategic planning, we're going to go into all areas of the business and probably spend a day talking about it. And from that, we've gotten some huge benefits. I've seen some huge benefits. People finally saying, "Yeah, I see what you're talking about now. I've always thought about it this way. Maybe we should do something different."
Yeah, and this year, I've there's so many potential changes planning for next year. And that has more to do with entities and tax things, not job segmentation. But I'm just tired of seeing the article after article after article of this is what the tax code is going to look like next year with all the changes. It's just I'm finally almost wanting to block out when people are telling me what the tax laws are going to be that they haven't passed yet because they've just changed. This has just been a crazy year. Maybe every year is like that, but this year seems substantially different. And we've started so many plans months and months ago to just say, oh, well, it doesn't look like that's going to happen anymore. And this planning all year long and going into the next year, trying to figure out what the tax acts are going to look like. But
Right. If you're not talking about it with your accountant and planning for it, you're going to have some surprises that you don't like. And you got to say, whose fault is that? My accountant not returning my phone calls? Maybe I need another accountant. Or is it because I don't like talking about it? It doesn't have to be that way, does it?
No, and going back to what Rob said, I mean, after 30 years of doing this as a CPA, we'll listen to what's going on and I try to be informed, but you take it with a grain of salt. And
yeah,
there are certain things like, was it last year, I guess, with the PPP loans, we didn't know until first of the year of 2021 how they were going to treat, like whether the PPP loans were going to be forgiven, well, whether that was going to be taxable or not. So we had to kind of say, this is what they're talking about, and this is what we think's going to happen, but here's the two scenarios, and we want you to be aware of it.
Yeah, and what are capital gains taxes going to be? Do we sell some of these this year or next year, or what do we? They're just that's
Yeah.
been a lot of my issues that I've had conversations with. So it's amazing. But anyway, I'm so glad to have informed people like Wade to be able to have that conversation with, because
Thank you,
most
Wade.
of my CPAs, I kind of jumped with a lot of CPAs. We've had one CPA, some for our development company, the same one for decades and decades. But some of my other entities, I just jumped back and forth, and I didn't know what the role was. Some of them are clearly just preparing your taxes, and I didn't understand. I thought they were all supposed to be like Wade, and they're just not interested. Some of them, that's not their business. Their business is to do the taxes, not to help you plan and prepare these things. So those expect you to have an in-house CFO or something like that. Didn't know where to look and how to have those conversations, and just understanding that every CPA does not play the same role because it says CPA. You talk to the different CPAs and figure out what you want and what they're offering, and when you can get somebody like Wade, that's a great asset to have. So
It's a touchdown.
touchdown. That's right. That's right. Good
There's a
deal.
lot of CPAs out there that say they do construction, but they don't necessarily know construction. So
Yeah.
Your bond agent sure knows who they are. That's for sure.
Yeah. Yeah, Stephen, anything else on that? I mean, I see
No, no, Wade.
you've
I
got
think
to be
Wade handled
kidding
it
me.
perfectly. I've spoken my piece.
All right. Well, Wade, you got any other parting notes? This is a great episode. This is a little bit longer than our listeners are used to. This is great
well, I
information.
guess my final tip is get some outside help. Number one, it'd be great to have a CPA, but even if you got somebody that does something completely different, talk to your bond agent, talk to any of your advisors. Sometimes when you get an outside opinion, you can get out of that tunnel vision, and it can make huge strides. Just that one idea can make a huge difference in your business.
Yeah, and it's not just about paying your taxes. That's not what your CPA for. They can help you make more profits. And one point I wrote down to say is, remember, like your example of the $10 million job versus the $300 million job. Don't forget that more revenue usually means more headaches as well. So even if it's even, the profits, it's easier to run all your back information, and it's easier on you if you can make more money with less revenue. And that's one of the summaries of what Wade was saying. But I love hearing that again and again. And I wish I had heard that 30 years ago. Some of my headaches of my large volume, low profit business was interesting. And we may have even had large margins, but we had such large headaches that our back office, our resources, everything were tied up. So those are great points, Wade.
Okay.
All right, is that it, guys? For the Contractor Success Forum today. This has been an amazing episode. Please go down, scroll all the way down through all those episodes. Look at the bottom and give us a big 5-star rating if you liked it. If it is a 1 star to you, just mark that 1 star right in your mind, and we're not going to tell you where the ratings are. So 5-star ratings, we appreciate it. That'll help us share that show with everybody else. So we are the Contractor Success Forum, contractorsuccessforum.com. We have Stephen Brown, McDaniel, Whitley Bonding Agency and Insurance, and Wade Carpenter with Carpenter and Company CPAs. And I am Rob Williams with Irongate Entrepreneurial Support System. And we are all giving you, what is it, insightful clarity at the Contractor Success Forum. Thanks a lot. Have a great day and do your year in color.